Ravi Dharamshi is our market master of the day. He's the Chief Investment Officer, ValueQuest Investment Advisors. Ravi, good morning. Good to have you with us here. Thanks very much for your time. Prashant this side. Ravi, we are in election season. It's a long election cycle, and all the way into June. I know you're not the one for very near-term kind of outlook, etc. But that's, I guess, top of mind for many. How is the market going to find its way through into the next a couple of months at least? Just any thoughts that you have and how you're thinking about things.
Thank you, Prashant, for that. I think it is really important that you put that in the context that think from 3 to 5 years perspective, and sometimes not focus on next 2-3 months. Something that we do. We probably miss out on a 5 market move because we are always looking 3 years, 5 years out.
He's with us, and I think he'd agree about the importance of copper. He's been a big backer of renewable energy, and we'll talk about that. But Ravi, sorry, we lost you there. Audio problems, but please, if you could start at the beginning. Go on.
Yeah, sure. No, thanks, Prashant. Thanks for putting that in context. See, we tend to think 3 to 5 years out, and we tend to sometimes miss out on the 2-3 months move. But we also would like to, kind of at least identify if there is a large enough move coming on the index or the market. Finally, long term is made up of short term, so we don't want to miss out on that. So clearly election is the event that is lined up, but I don't think that's an event that is going to give a very large move on either side. Market has been anticipating. The probability is that the event is likely to pan out positively for the market. Even in that scenario, I don't see markets reacting in a major positive way immediately post the election. Yes, it will continue to be a positive, but market has been kind of factoring that in going in. So I don't think that election is a reason for markets to move more than 5-7%.
Okay. Ravi, since we are on the topic of election, and I know, of course, we'll know when we know, but do you think, 320 to 350 seats for the BJP, I mean, that kind of number is in the price? Only for the BJP?
See, I have no way of knowing what kind of number is factored in, but what I can tell you is, as long as the current dispensation is coming back, even if it is with reduced seats or more seats, it doesn't really matter. All that is good for TV debate. But from market's perspective, what we are looking for is policy continuity, political stability. As long as both those scenarios are not hampered, I don't see any major reaction in the market.
All right, by the way, the market is doing really well. 100 points higher now on the Nifty, holding on firmly above the 22,200 mark. And the best part is the broader market momentum. Just look at that. The mid-cap index is up almost 500 points. And that's a big move this morning. Ravi, hi, welcome to the show. We've been chatting all along, right, in the last many months about how this is a stock picker's market. But now at this point, what are the sectors or stocks or themes that look good to go for the slightly medium term to you?
Yeah, so since post-COVID, actually, we have been focused on more domestic-focused sectors, more rather than export-oriented sectors. And also within domestic-oriented sectors, we were focused more on cyclicals, capital goods, auto, maybe financials. Those were the kind of sectors that were likely to do well. And I think even at this juncture, this particular thematics is likely to continue for some more time. I don't see exports reviving in a big way or rural consumption reviving in a big way yet. But that is the area. The disconnect in the market is what is known is already factored in, and what is not known, the fundamentals are not yet improving.
Hi, Ravi. Good morning and good to see you. And I wanted your view on two sectors. The verdict out there is pretty much split. On chemicals, how are you all placed? You all have a liking for the specialty chemicals companies, which is well known. And also on pharma, that's been the big outperforming sector. We're talking about a lot of other themes that are playing out. Pharma, quietly, it's been moving up. 2024, it's the big outperformer.
So chemicals and pharma both fall in the category of sectors that have not done well for the last 3-4 years. And hence the opportunity has arisen over here. However, what I would like to say is that top-down sector view might not be the correct way to look at it, and more bottom-up stock picking in these sectors is what we should do. See, chemicals had a fantastic run from 2014 to 21. And that was a macro call of China plus one, and everything kind of benefited. China put production cuts and India put tariff barriers. So that kind of helped the players over here. But now now it is that particular trade is done. Now it is focused on which company has the ability to compete with Chinese or is not competing with Chinese, and which is the real specialty chemicals. Those kind of companies are likely to benefit going forward. So no doubt valuations have become much more reasonable and opportunity exists, but it will still be a bottom of stock picker rather than a sectoral call. Similarly, in the pharma also, as I have always discussed in the past, in pharma also, there are various buckets. Oral solid export-oriented generics are unlikely to do well. There is a cyclical uptick over there because the pricing pressure is reducing. But what we do prefer now going forward is stock-specific, company-specific companies that have strength in an area where where the competitive intensity is on the lower side, valuations are a little reasonable, and that's how we are focusing on it. It's not a top-down call on pharma or chemicals, but it's more a bottom-up stock picking in these sectors.
Ravi, could you talk to us about sort of one or two ideas? I mean, just to sort of explain the thesis behind how you're thinking about some of these things, because as you said, I mean, that a bit about China, companies which are perhaps competing well or not facing off against China. I mean, just to sort of make clear the thinking on some of these issues, if you can talk to us through some of these ideas, one or two ideas that you perhaps have liked and are liking right now.
So, sure. So I'll give a sense of the framework that we use in terms of evaluating. Will not be able to speak any particular company specific, but what we do like is a company that is focused on a niche area and has the ability to expand in the adjacencies, not directly competing with the Chinese companies, especially on the mass scale or something. For example, commodity companies where there are no trade barriers are going to be susceptible to very sharp cycle on the upside as well as on the downside. Those are the kind of companies that we would like to avoid. However, there are companies which might look small in their particular scheme of things. Even within chemicals, there are various baskets. So the particular basket that we do like is the pharma intermediates. Because India is a large base of API companies and formulation companies. What we lack is the intermediate and key starting raw material, which is where China dominates. So if we can find a company which is kind of a niche in the pharma intermediate space, because the end customer is all in India, and where the market size is not yet so large that the Chinese are supplying to that space. That is the kind of framework that we look at to identify niche plays in chemical or pharma space.
Okay, there's one thing I wanted to discuss with you, Ravi, and that was what's happening with the tech layoffs, right? There are large layoffs happening globally from global tech giants. Even in India, the situation in the tech industry is not that great, with average salaries not increasing for a while, etc. Do you think all of this will impact consumption or demand over the near to medium term? Is that a valid concern?
Yeah, so first I'll give my views on the technology, or rather, I don't consider them as technology companies. They are more technology service provider companies. So essentially, we outsourced IT servicing is what we do. That particular business model has matured. See, we had a great run for the last 25 years. The companies have gone up to create some of the best wealth in this country, and clearly that is feeding into the consumption as well. Because these are all migrant laborers that move from maybe the tier 2-3 towns to some of the cities like Bangalore, Pune, and that gives a boost to the consumption, to the real estate over there. It's been a large factor, but going forward, I think their importance in the overall basket of consumption should reduce. And manufacturing as a sector is picking up, capital goods cycle is picking up. Real estate is only doing well at the premium end of the segment right now, not at the bottom. Affordable housing is not doing that well. So to summarize what I'm trying to say is that, yes, at this point of time, IT remains a big contributing factor to the real estate cycle, especially within the consumption also. I'm talking about the real estate. It's a big impact. However, going forward, it will reduce. In fact, if you look at some of the other sectors, the pay increase, the kind of shortage of people on the manufacturing side has been far, far more severe. So that gives you an indication of which way the wind is blowing. Manufacturing sector is picking up in India. In the non-IT services part, actually that is doing quite well. So there are other services which are not really IT oriented. They are doing quite well. So hopefully we will be able to replace the demand impact from the IT services by some other sectors, and overall it might not be so much of an impact.
Okay, I have one final question before we let you go, because this is the next discussion. So I just wanted to lead into that, right? Elon Musk has postponed his trip to India. So there are, of course, a lot of problems happening with Tesla globally, with the fall in sales, etc. So the view is that Tesla may push forward their entry into India as well. For a stock like Tata Motors, which has been doing phenomenally well, do you think this could impact them positively, or is that too simplistic an assumption?
I won't be able to comment on a particular company, but what I can say is we all should be looking forward to entry of Tesla into India. I think it will give a boost to an entire new ecosystem that, yes, Tesla already has like 7-8 suppliers from India where they are procuring some or the other parts. But and Tesla, overall EV might be slowing down elsewhere, but I think India has a market, the EV is yet to pick up. So it's a sunrise sector, and entry of a giant like Tesla is going to give a boost to a lot of the ecosystem, auto component ecosystem over here. From the perspective of competitive intensity, I think it's in a state of flux. A lot of new EV variant will come to the market. There will be a lot of new launches. And over the next 5-7 years, we can expect the EV passenger vehicle percentage in the markets to go up by maybe somewhere between 10 and 20% to by in 7-8 years. So that will put pressure on the incumbents and the ICE vehicles for sure. So, but I am not yet willing to say who will be the winners or who will be the losers in that. One thing is for sure, EV as a trend is here to stay, and it will the penetration levels will rise.
Okay, well, that's a very interesting way of looking at it. And that's the common narrative, right? Tesla's entry into India will broaden the ecosystem, will provide jobs, will provide work for a lot of auto ancillary players. So in general, the entire ecosystem will grow. But thanks a lot for that, Ravi.